Hello and welcome. This is Abhinav and I welcome you. In this video, I'm sharing some pointers for digital nomad taxation in India. Uh, okay, so now what is happening is that nowadays a lot of people are, there is this trend that people are working as digital nomads. Now, it is a lifestyle choice for many people because now technology has enabled everything. You can be in one place and do the work from other place, and because of the use of technology you can be at many places, and do the work. There's no kind of compulsion that you have to be at one place to do your work, right? And because of the collaboration tools and all that are available, there can be a team which is working from like five different countries, and they can do that work, and they can also work from another five different countries, right? So the work doesn't get impacted because of technology. Right now what is happening is that the tax law of the various countries, right, and the UN and the OECD model convention, they have not kept pace with this kind of a work arrangement, right? Because they are still kind of having this thing that the primarily they focus on the residence based taxation, right? That if you are working in India, then India has the right to tax. If you are working in USA has the right to tax. So that's still the tax laws have not tried to kind of catch up with this kind of a work arrangement. So what basically these digital nomads do is that they keep traveling different countries, and when they travel different countries they try to escape the tax residency provision of that particular country, right? For example, India has a requirement of 182 days, right? So they will try to, or 60 days, right? So they will try to reduce their stay in India, so that they do not cross that threshold. They move to Sri Lanka, then they move to some other country, right? And this is how they try to structure so that they end up not paying tax in any country. Now there is ethical question, whether this approach is right or wrong, right? And then those ethical questions are also there. So in this video basically I've just tried to kind of summarize some of my points in coming across such clients, and it is a very gray area and it's evolving area, but some points I'm trying to share with you. So they, what they do is that they choose to stay in countries with relaxed tax residency. Now there are a lot of countries which are coming with digital nomad visa, right? I think Estonia, Croatia, these countries have dedicated visas for people who are like digital nomads, which has a significant visa fee, but they allow you, and they do not, they have relaxed tax residency requirements. So these people, they prefer working from those countries, right? uh, Now understand, there is a difference between digital nomads and remote workers. See, digital nomads are people who travel from country to country. That's like, for some people it's a lifestyle choice also. For some people, they basically want to evade tax, that's why they do it. But remote workers is different, right? Remote workers is basically a person who is in India working for a US company, right? Who is based in India, but he is working remotely for a US company. I've also made a video on taxation of US salary income in India. So for those kind of cases, you can check that video. Okay, so that is different digital nomads, remote workers. Now as I said, the taxation rules of the individual countries and the UN OECD model conventions of DTA are still, primarily they are residence based taxation. So it's basically saying that if a person is working in India for a US company, as long as his stays in India, he is working in India, India will have the right to tax. And then there are some exceptions to it in the DTA. So they basically still focus on this thing that, if you work in India, stay out of it, stay off of out of a particular country, I will have the right to tax. But what about cases where person is traveling, right, in different countries for the same work, right? So the tax laws are yet to catch up. Now, for the tax professionals, since it's a gray area, see, as a tax professional, all those tax professionals, maybe anyone who is watching it, see, you'll find cases of people like these digital nomads. Some of them, I will not say all, they are more focused on strategies to not pay tax on the income in any country. Right now there are, see, ethically, uh, in my view this approach is incorrect. Ethically it's wrong, right? They, what they try is to, find out countries which have a lower tax residency, so that they don't pay up the tax in any country. Now, understand, proceed with caution. You are not like kind of advising from the client's point of view also only. If you are registered, like if you're a practicing chartered accountant, you have to also see the law, which is, as a impartial, right? So proceed with caution, get all the facts from the client first, because sometimes how they structure, the people who come to you, they structure it in such a messy way without someone advising them something. Like I got a like case, someone, he had a LLC in US, and the guy was billing it from India, right? And then he was thinking that I will not pay tax in US, I'll not pay tax in India. So I advised him properly. So first, get all the facts first, how they are invoicing, what is the, is there a fixed place PE in India, right? All these things that you check. Now be careful, you don't want to kind of end up end up being construed as conniving with the client, that you are helping him evade tax. No, because if you do that, then you have a liability towards the regulatory body also. So be very clear, advise them, caution them that it's a very risky thing if you want to do. Various countries are trying to kind of increase their scrutiny on these kind of things, right? So caution them, and especially be careful of people who just don't want to pay tax in any country. So then at the end, if they are still adamant, and then you can even decline the assignment, in my view, right? So be careful while dealing, because it's a gray area, right? Okay. Now, and also tell them that it's totally interpretation based, right? Because the tax department may have a totally different view on this kind of a arrangement that you have done, right? So that risk will always be there, right? Okay. Now, what are the taxation rules? Now let's come to the taxation rules in India, right? Now, uh, if you stay 182 days or more in India, the worldwide you qualify as a resident, and the worldwide income is taxable in India, right? Now, even stay in parts, if you are a digital nomad, and you, it's not a like a 182 days continuous stay. Even if you stay in parts, it gets counted for the 182 days. Now if you say that I am not there in 182 days in India, so I'll be a non-resident, no, still 60 slash 365 days rule applies. So 60 days in the previous year and 365 days in the previous 4 years, if you are there in India, still that is. So it's not 182 days, it's also the 60 days rules also needs to be checked. For example, there is a person who says I'm a digital nomad, and then if you actually see, that person was in India only for the past 4 years. Because if that be the case, you may assume that, oh, he's been traveling all these countries. No, don't assume. Ask that what about the past 4 years, right? So past 4 years, 365 days he has been more in India. So then the limit that you have to check and you have to advise him is 60 days, right? So don't presume anything, ask. Now, income, understand one thing. If the income of that person in India is greater than 15 lakhs or previous year, then the 60 days rules become 120 days, right? 60-day rule becomes 120 days. Actually, this is a flaw by the income tax department. The way they have construed, this is a new rule that had come in 2021 around. So they should have done from 60, they should have done 30 days. They have actually, it's a like a wrong unintended consequence that has happened. Instead of 60, they have done it 120. They have given them that leeway, right? So remember, where you also ask him about the Indian sources income. If it is more than 15 lakhs, then it is 120 days rule, right? Okay. Now understand that if the business income, now there are few situations, the person still becomes a resident of India, non-resident of India, through the stay rules. But you have to also advise, you have to also check that if the business income that is there is from a business connection in India, or there is a significant economic presence of that person in India, the income will be taxable in India irrespective of the residential status. This is coming from Section 9 of the Income Tax Act. Incomes deemed to accrue or rise, or income from business connection in India, and Rule 11 UD, which talks about the significant economic presence. That means like 3 lakh users or 2 crore rupees of payments, right? So you also have to advise that this, if you may fall into, if you fall into this rule, then it is taxable in India irrespective of residential status. Then, yeah, if you qualify as a NR or RNR, only Indian incomes are taxable. But if business connection is there, so then it is taxable. Or if the income is directly received, for example, the person has a US LLC, and the person is invoicing from India, and the LLC makes the payment directly to an Indian bank account. If if the person is receiving the payment in an Indian bank account, irrespective of the residential status, the income is taxable in India. So you have to be careful that you don't receive it in an Indian bank account, right? Now, very, very, very important provision which is introduced in 2021 is the deemed residency provision, right? And this is where all the digital nomads who want to escape the Indian tax will get stuck. Now, deemed residency provision says that if you are an Indian citizen, now understand that it is only applicable on an Indian citizen. It doesn't apply to a foreign citizen, right? If the person has like taken a US citizenship, this provision will not apply. It's only on the Indian citizen. Plus, if the income from Indian sources is exceeding 15 lakhs and the person is not liable to tax anywhere else, right? In that case, the person will be constituted deemed as resident in India, right? As a R-Nor, right? So his income will be taxable in India. Now, understand this: liable to tax doesn't mean that the person faces zero tax, right? For example, the person has incorporated now in Dubai, UAE. Now you have corporate tax, but the for example, person is in a jurisdiction which has zero tax, so he will not fall into in this, right? This is basically intended for people like digital nomads, high net worth individuals who kind of plan their stay in various countries to escape the tax residency of any country. So they will earn a sizable income of like 10 crores, but they do not qualify as a tax resident of any country. So everything gets tax free. But if the person is an Indian resident, his income in India from Indian sources is more than 15 lakhs. For example, they've sold a property, or that income is therefore exceeding 15 lakhs, they will be deemed as resident and not ordinary resident, and they will be deemed as a resident of India. So this is a very important provision that you need to keep in mind. Okay, then, okay, if you qualify as a resident, what happens? Suppose your stay increases, like you from a stay perspective, number of days, you qualify as a ROR, right, of India. So what happens is India will tax all your incomes, right? So then still there is this possibility that you can check the DTA between India and the originating country from where the income has originated. Generally, if the DTA may have any kind of a favorable provision. For example, the income is taxable only in USA if the entity has no PE in India, then the income stays taxable in USA, right? So that again you can check that. So my point is that even if you qualify as a ROR in India, still the DTA can give you a relief and you can be taxed in the country of origin and not in India. So that again, one more thing that can be checked. Now, in India, if you hold a PAN in India, always I advise that please do go ahead and file your tax. File your tax return even if it's a nil income return, because the particular thing is that you don't want to kind of get notices from the tax department that against this PAN there is no return that has been filed, right? This is actually silly on part of the uh, tax department. Just against a PAN, if there is no return, they send a notice and then you have to reply, and it's a kind of a hassle, right? Better, and to maintain continuity, always file a PAN in India. And also from an identity theft perspective, always against a PAN, always go ahead and file a return, right? So that the return gets kind of PAN gets locked with respect to that particular year. Nobody else can file the return fraudulently or something. Always best practice, file a return. If you have a foreign income and it is exempt as per the India USA DTA, you can in schedule EI you can state it as an exempt income. So Indian income tax department cannot say that oh, you did not disclose this income to us. No, you should give it in schedule EI stating the DTA clause that it is exempt, why it is exempt. Also disclose in the foreign source income FSI. If you are a resident and ordinary resident, also disclose in the FSI, right? And now, FEMA point of view, like for example, if you have an uncertain, if you're not certain to kind of stay back in India and you want to just travel, then you need to convert your accounts, resident accounts to NRO, and you can also open NRE. So, for example, you need kind of certain funds which you want to repatriate out of India. You can bring it to the NRE account. It'll earn you a tax-free interest. So that is something you need to convert all your resident accounts to non-resident accounts as per FEMA requirement. Now, if basically your business involves any supply of goods and services in India, or receipt of funds in Indian bank account, then check for the GST provisions, right? You may qualify with the GST registration and the associated compliances, right? Okay, so these are some points on digital nomad taxation. I just thought to share if it may be useful. It's a evolving area, developing area. So do share your feedback, your thoughts in the comment section. Thank you so much for watching this video. Thank you so much.